ever had a moment where you looked at your insurance bill and thought, is this really the best deal that I can get? It's easy to just pay the premiums each month and assume you're getting the best value. But the truth is, many of us are overpaying for insurance without even realizing it. And the worst part, we often don't take the time to change things up, even when we could be saving money. In this video, we'll dig into the top 3 reasons that people end up overpaying for insurance, and more importantly, we'll talk about how you can avoid making these mistakes. With just a few simple steps, you can be putting more money back into your pocket without sacrificing the protection that you need. So let's jump in and figure out what's going wrong and how to fix it. Number 1, not shopping around for the best deal. There's one thing that stands out when it comes to overpaying for insurance. It's not shopping around enough. You may have picked an insurance provider a few years ago, and now it just feels like the easiest option to stick with them. But here's the kicker. Insurance prices can change significantly year to year. If you haven't looked around in a while, chances are you're paying way more than you need to. Think about it this way. If your car insurance bill has stayed the same for the last few years, doesn't mean that you're still getting the best deal. Providers regularly adjust their rates, and so should you. Just because you've been loyal to one company doesn't mean they're offering you the best price anymore. In fact, your provider may even raise your rates without you realizing it, banking on your reluctance to switch. This is where comparison shopping comes in. The biggest mistake you can make is assuming that your insurance company is offering you the best deal just because you've been with them for a long time. Rates can vary widely from one provider to another, so you owe it to yourself to check and see if there's a better option. Take the time to get at least 3 quotes from different companies. It's really easy to do nowadays with many websites that let you compare rates from a variety of insurers with just a few clicks. But don't stop at just the numbers. Pay attention to what each company offers in terms of customer service, coverage options, and financial stability. The lowest price isn't always the best value if it comes with poor service or weak claims process. And while you're at it, ask your current provider about any changes that might justify a rate increase. If your rates have gone up, ask them to break it down for you. In some cases, they might offer you a lower rate just to keep you from leaving. But it all starts with knowing that shopping around is key to finding the best deal. 2, not adjusting your coverage as life changes. Another major reason why people end up overpaying for insurance is that they don't adjust their coverage when their life circumstances change. Think about it. As you go through life, your needs change, and so should your insurance. But all too often, people just keep paying for the same coverage year after year without ever stopping to think, do I still need all this? For instance, let's say you've recently paid off your car. Once you've paid off your car loan, you're in a better position to adjust your insurance. Do you really still need that collision and comprehensive coverage? Probably not. If your car isn't worth much anymore, keeping comprehensive and collision coverage can be a waste of money. Instead, you could switch to liability-only coverage, which could save you a significant amount each year. But it's not just cars that need adjusting. If you've recently bought a home, gotten married, or even paid off your mortgage, these are life events that should prompt you to review your insurance. You might find that you're paying for coverage that you no longer need, or even more importantly, you might be missing out on discounts or coverage options that are now available to you. Another common situation is when people don't adjust their home insurance after making significant changes to their property. Have you renovated your house recently? Or maybe you've made improvements that raise the value of your home. If you haven't updated your homeowner's insurance policy to reflect these changes, you might be underinsured. On the other hand, if your home's value has dropped or your area has become less risky, you might be paying for coverage that's more than you need. Here's the thing. Life is constantly changing, and so are your insurance needs. So it's a good idea to review your coverage at least once a year or after any major life changes. Make sure that what you're paying for still makes sense, and if it doesn't, adjust accordingly. 3, not taking advantage of discounts. Did you know that insurance companies offer a ton of discounts, but many people don't ask about them? It's easy to assume that what you're being quoted is the best deal. There's often room for savings if you know where to look. For example, bundling your auto and home insurance is one of the most common ways to save money. Many insurance companies offer a significant discount if you get both policies with them. If you haven't bundled yet, it's worth asking your provider to see if they could save you some cash. But bundling isn't the only discount out there. You might also qualify for discounts based on your driving habits. If you're a safe driver with a clean record, make sure that your insurance company knows about it. Some companies offer discounts for having anti-theft devices installed in your car, or for driving a car that's particularly safe or low risk. Low mileage drivers drivers can also save money by taking advantage of the low mileage discount. If you drive less than average person, typically around 12,000 miles per year, you could be eligible for lower rates. And if you're someone who doesn't drive often, you might even want to explore pay per mile insurance options, which allow you to pay only for the miles that you actually drive. This can be a great option for people who rarely use their car but still need insurance. On top of that, don't forget to ask about discounts for things like being a good student, being married, or being a longtime customer. These discounts are often available, but only if you ask. Insurance providers rarely just hand them out without prompting, so make sure to ask about every possible way to save. The best way to take advantage of discounts is to regularly review your policy and ask about any discounts that you may be eligible for. Even if you've been with your provider for years, don't assume that they'll automatically apply these discounts. Be proactive and get the savings you deserve. 4. External factors that contribute to high rates. Now we've talked about things that are in your control, like shopping around, adjusting your coverage, and asking for discounts. But there are also some external factors that can make your insurance premiums higher, even if you're doing everything right. For example, your credit score plays a big role in your premiums in many states. Insurance uses your credit score to determine your likelihood of filing a claim. If you have a poor credit score, it can signal to the insurer that you might be a higher risk, leading to higher premiums. So if your credit score is low, it could be contributing to your higher rates. Another factor is your location. If you live in a high crime area or an area prone to natural disasters, your insurance rates are likely going to be higher. Insurance companies have to account for the increased risk, which means higher premiums for you. Age and driving experience also matter. Young drivers tend to have higher premiums, especially if they don't have a lot of experience behind the wheel. If you've got a teen driver in the house, this could significantly increase your insurance costs. But over time, as they gain more experience and as they demonstrate safe driving habits, their rates should go down. It's important to remember that these factors aren't something you can change overnight, but they can be addressed over time. Finally, if you have a history of claims, traffic tickets, or even DUIs, your driving record will absolutely impact your rates. So if you've been in an accident or have received a violation, it might take a few years for your premiums to go back down. So when it comes to insurance, it's easy to just accept the status quo and keep paying the premiums without giving it much thought. But if you want to stop overpaying, the key is to be proactive. Take the time to shop around, adjust your coverage as your life changes, and ask about all the discounts that you may qualify for. And don't forget to regularly review your policy to make sure that it's still the best fit for your needs. By doing these simple things, you can avoid the common mistakes that lead to overpaying and make sure that you're not spending more than necessary for coverage that you need. It's all about being smart and making sure your insurance is working for you, not the other way around. So take a few minutes today to review your insurance, get a few quotes, and see where you can save. You'll be surprised at how much money you can keep in your pocket just by being a little more proactive about your insurance. And if you want to see which insurance option is best for your situation, we'll leave links to our affiliate links below to surveys that you can take. These are affiliate links, so we earn a small commission when you use them at no extra cost to you. And your support through these links helps to keep our channel going and allows us to keep creating free content just like this. So if you end up using those links, we thank you so much in advance. And if you found this video helpful, don't forget to like, subscribe, and hit that notification bell so you never miss another video. Here on InsuranceWise, we break down everything you need to know about business, home, auto, and specialty insurance, helping you make informed decisions to find the best coverage for your needs. So be sure to subscribe. But other than that, thanks for watching, and we'll see you here in the next video.